expiration date actually a month ago, because by the 15th of April this year, the money that you earn actually is going to you, because the first 3.5 months of the year is all going to the government in one form or the other. In the UK, because the tax year starts later, I think it's mid-late June this year. So you work the first 3-4 years for the government, and then the rest of the year is for you unless in the UK, particularly when you die in the UK, because then the government takes the rest. Anyhow, just something to start the day with. Now, last week I talked about the potential for a crash, and there were lots of clues going on, and particularly the clues were coming from the bond market. And I also touched on the subject of SpaceX IPO. And I think I can share this with you guys. This is a really good article and it's worth having a read. So if you are thinking of investing in the SpaceX, then I am not giving you advice one way or the other. I will tell you in a little while what I'm going to do on this. But I put it in the chat box if you want to have a read. If you've been thinking about it, then have a read of this article. It goes into a great detail. There's a lot of red flags in here as to why this is hype. A lot of it is hype. Musk is going to have control of everything and not be accountable, this guy is claiming, and says that because of the share structure, the way it's done, he will be CEO, CFO, he will be everything, and shareholders will not be able to outvote him on anything. So lots of red flags with this. And it goes into great detail about the accounting procedures and things as well. And SpaceX is the thing that's making money. Sorry, not SpaceX. The phone Starlink is making money. Everything else is losing money, and significant amount of money. And they're going to spend a lot of money in the next year or two as well. So although you can get in this time, have a read. If you're thinking about it, have a read. In the 70s and 80s, we used to have a lot of IPOs in the UK. They sold off all the public utility companies, and people would pile in and they would make money and they would be oversubscribed. It will be interesting to see whether or not this is oversubscribed. I suspect it will be, although I think they've got a very important rocket launch to go ahead between now and the middle of June. And God forbid anything goes wrong with that. That could knock it back as well as. But yeah, have a read. And just double check. I mean, what I do these days, I use ChatGPT because this is a long article. So I just ask ChatGPT to summarize everything. I'm getting lazy, but it's a lot easier. So this is in a bullet point thing. And he's talking about that Starlink is the main profitable. And he's talking about the major risk factors for him: huge AI cash burn, as with all these AI companies, they're spending loads of money. And this seems very symbolic to me. It's very similar to the dot-com boom, when you had lots of these companies raising and spending lots of money. And then, particularly in a competition like this one, many of them will fall by the wayside. And he's talking about Grok, I think it's got $500 million worth of potential legal bills, the concern about Musk's control. Retail investors. Now, normally with a big IPO like this, retail doesn't get a chance. This time there's talk that they could get up to 30%. Well, that again makes me a little bit wary, because if the retail are the ones going to pile in at this late stage, are they just the exit cash again? And the other thing about all of this is that, well, on a number of things. One is that the booms and busts going back 100, 200 years often have coincided with major events. So, for example, in the 1800s, it was railways. And that was a scenario where there were loads and loads of private railways springing up all over the countryside, and many of them went to the wall. So there are historical reasons to be cautious as well as. The other thing to think on is that they're talking about Musk and raising $50 to $75 billion for this IPO, and that has to come from somewhere. So it could well be in the short term that money flows out of gold. It could certainly flow out of Bitcoin and other asset classes where people are and investors are thinking to realize some cash to be able to have cash to be able to buy into it. And there's lots of other things as well. What I suspect, I said this last time, what I suspect will happen is it will be like a Trump meme coin. It will shoot to the moon And it will be the following day, because the NASDAQ have changed the rules and they can be admitted into NASDAQ within a matter of days. Then all the hedge funds in America legally have to buy into the stock. So it could go up yet again. But historically, these kinds of things do not end well. And most of them, if not all, in the first year will drop back significantly and then start to settle. Now, in the midst of all this, of course, we have from a daily basis, are they going to be peace? Is there not going to be peace? So we're firing at one another again yesterday. Trump saying he's got a deal. And I think Trump now, to be honest, is in a corner where he's not going to come out of this very well, no matter how he tries to sell it. Iran has dug its heels in, and there's still talk about it. This is a memorandum of understanding. A memorandum of understanding is, if you're familiar this with companies, purchases, MOU, just means basically this is the deal that we're proposing, but it doesn't necessarily mean it's going to work. And so if Iran does not agree to hand over its uranium, which Trump is calling a final line in the sand, and they're trying to kick the can down the road and say, oh, we'll discuss it over the next 60 days. In 60 days' time, he's not going to have his armada down there, and they may turn around and say, no, we're not giving it. And they're also after billions and billions of dollars, which was confiscated 30 years ago when they first started misbehaving in the Middle East. So all of this going on, we could end up with a peace deal, yay, woohoo, and we end up with the IPO, woohoo, everything's marvelous, and then it could all tank. So I said to you last week, this is if you go into my other blog, Investing Analysis, I was talking about potential crashing coming. I was talking about the fact that I have been going back to cash. In March, I spoke about there was no need to attack Iran because inflation in Iran could do the job without military intervention. And they're talking this year alone that inflation so far this year compounded is around 69%. And people already were struggling to buy food. Once people get to the point that they can't buy food, that is when you are most likely to see regime change from within, which I think is what Trump was hoping and has not happened as yet. Now, other things I talked about, the winners and losers, and talking about the bonds especially. And the bond market is the thing that could kill everything. And the bond market is what happened in the UK when Liz Truss, shortest prime minister on record, I think. Somebody did die in office after 10 days, but one of the shortest prime ministers in history. It was the Bank of England and it was the bond market that got rid of her very quickly. So it doesn't matter how much positivity Trump spins and all the rest of it. If the bond market starts to go up further, and I showed you last time how the interest rate now on the 30-year is above 5%, or was yesterday. All of that means it won't matter. So I have cashed out a lot of my stocks. I am now over 50% in cash and gold and silver. And I'm also watching gold and silver carefully because I think in the short term, as I said earlier, you could see people cashing in gold and silver and miners to release cash to buy into SpaceX. And so all of these things you will find in my blog, what I'm thinking about. I'm having to think about these things on a daily basis, and I'm having a watch thing every day because of the Trump scenario and the Middle East. And so, again, when they come out with a peace deal, you need to read behind the headlines because there's a lot more to this than I think than is being told to the public at the moment. Now, conversely, there is a claim that credit card debt has dipped a little in America. It's only 1.25 trillion now. But the American debt situation, obviously, the country's debt is insane, and none of the politicians appear to ever going to face up to it. And then here, this is a very good guy to follow in Substack. This guy is called Alfonso Peccatiello, and he's an Italian guy, as you guessed from the name. He's a macroeconomist. Now, I don't subscribe to Alf's Substack, and I've been down the rabbit hole of macro before, and to me it just gets too deeply involved and I can't cope with it, but he does make some very salient points in here. And once again, I ran this through ChatGPT, and this is quite a nice easy article to read. But if you go into ChatGPT, the main things he's talking about, the US political system is heavily incentivized to avoid recession. And I said to you the other week, we have the midterms coming up later this year. And for Trump and the Republicans to have any chance of maintaining control of the Senate, they need to win the midterms. And at the moment, the chances of that are looking extremely slim to no chance. And so they're talking about what are they likely to do. And the probability is If everything turns to the messy stuff, they will start spending more money and printing more money. And that's going to put pressure on the new guy at the Fed, who Trump's put him in on the basis he's going to push for rate cuts when it now looks like he's inherited a poisoned chalice because now he's going to have to preside over rate increases later this year. And so again, they're talking about eventually renewed liquidity injections. Don't mention QE; they'll come up with a new name for it. But basically, the government prints loads of cash, stimulates the stock market for a while, but then when it slows down, he's talking about hard assets. And as you know, I have been positioned in these for years. Gold from 2021, commodities and uranium, rare earth, etc. over the last few years, energy being getting more and more into, well, I got into uranium, I think 2023, and being getting involved in energy companies. Bitcoin have been in since 2020 as well. So all of these things, according to Alf, expert in macro, I'm in the right thing at the right time. But even then, I'm twitchy because, as I said before, in 2008, when the stock market came down 65%, gold came down 35%, although it only took a year to recover. And I am looking at gold as a longer term. And again, I've covered that in recent weeks. Since 2000, gold has gone up 1,500%, whilst the dollar has gone down 50%. So gold and silver for the longer term. And I am starting to think more about the longer term. I have some private clients who are kind of 50 plus and a few in the 60s like me, starting to think about, well, everything I've done in the last few years has been from a defensive point, which is gold and silver and the miners, etc., and using the miners for leverage. But mainly, I've not been interested in any dividend stocks. I don't see the point. S&P on average now, the S&P 500 companies collectively paying out about 1%. Well, I'm not getting involved in anything for 1% unless it's cheap. And I'll show you a few examples in a little while. And then again, Alf's talking about bonds because what's going on with the bond market is nobody in his right mind is going to rush to lend money to the Americans, even if they're paying you 5%, if the chance of inflation is going to continue to be higher than that. And there's a lot of countries losing confidence in the US with their bombastic foreign policy that they've had for 30 years, and obviously much worse under Trump. So all of these things. And another important one is Japan. Japan traditionally was a big buyer of US and European bonds because in their own country, the bonds weren't paying any interest. Now, interest rates on bonds in Japan are looking a bit more attractive, and they have stopped buying bonds as well. So there are fewer and fewer buyers for bonds, and the interest rate is going up, and therefore the bonds are going down. Not good, and this is what could lead to all of the things that are tied in with I've been talking to you for a long time about. And then another one, this was about the bond market, and Ashley will be spotting this one. This is a potential head and shoulders pattern, but actually it goes back to 1790, so I don't think this one's valid. This is talking about treasury yields, and it is comparing the treasury bills against commodities. And when commodities, the blue line is above this horizontal line, as in now, this is usually a sign of a commodities bull market, whilst the bonds go down. And that would appear that that is where we are at the moment. What was the other one I had in here? Another screenshot in here. Oh, another mixed message as well. US consumer sentiment falls to a new record low. People are fed up. They're not getting much money. Their wages are down. Inflation is up. And we know it's a lot higher than the BS that the government give us. And obviously, petrol prices, very sensitive to petrol prices, the Americans. And obviously, that is going to feed through in inflation as the year progresses in all these countries. Now, one good piece of good news last week, this is quantum computing. Quantum computing became big news last week because the US government has pumped $2 billion into it. Well, if you've been following me along in my investing group, you will know that we have been involved in these going back years. IBM I bought last week, and it actually went up, I think went up 10, 12% the following day. IBM I was looking to buy anyway because it was cheap and they'd been restructuring and it was looking interesting. But then also I was checking and my due diligence going through it, and they were talking about rare earth and quantum computing, especially quantum computing. And the very next day after I sent the buy note out, it went up 10, 12, 14%, which was very nice. And I am still in this, and I would be buying again on pullbacks. And IonQ, one of my best ones, I started buying that with the investing group in May 25. So I've been in it a year, And since the initial buy, that is now up 176%. And these are recent buys. So we've had some recent buys. I think we took some profit out of the top. This is all to do with the needle now is pointing to quantum. And that was what we were involved. And because we've positioned ourselves early, then we've managed to make decent profits from that. Now, on the subject of dividends, I was talking about a little earlier. I can never remember the term, but it's dividend aristocrats. These are companies that have raised their dividends for more than 10 years in a row and have a minimum 3-month average daily trading volume of at least $1 million and limited partnerships trading on NASDAQ, NYSE, or the CBOE to qualify. And so these are the companies who are paying out the best dividends, or they fit the previous criteria. But the dividends, again, generally are shocking until you get to Kimberly-Clark. And I have been looking at Kimberly-Clark. It is a stock, this type of stock tends to do okay, if not well, during a crash. And the price of this one is down at the moment. So that's the kind of thing I do. I go off and have a look at things like this. I'm not going to start running after Walmart at 0.82% and it's up near the highs, because there's absolutely no point to me. But the only time that I would be interested, I said, if I could find something at the right price. And I'm sure I looked at Kimberly-Clark. Is that the one? Kimberly-Clark, there we go. So Kimberly-Clark, have a read. I haven't finished with the due diligence yet, so I haven't put the buy note out for the investing group. But the shares are, the dividend is well covered from their cash. Dividend 5.9%, 5.2%. And of course, it has to fit the usual rule of at least 25% to recent highs. Only gets to 11 here. But if we can start getting back up here, it could be a decent one to get involved in. And say it is the type of stock that tends to do well in a slump. And then what I do is once I've found something that looks interesting and it fits my rules and it's paying, let's set a new rule and say I'm not going to touch anything for less than 5%. That's the rule. Once I've found something, then I run it through a screener. So, for example, this one is Best Buy. I was looking at Best Buy. Don't think the stock is particularly good. I can't remember on this one. Have I got? Let's see if I've got some of the ones I've been looking at. IBM. That was IBM. So this was IBM, looking at this in more detail. This is something I subscribe to. I think about $100 a year. And they look into all different things, one of which is ownership. So they're looking at shares bought or sold. That's not really enough to be of any interest. I was looking at one of these others. This is a REIT, which does look interesting. And I'm just going to look at this a bit more. PE ratio 10. And I think the dividend is around 10, is it? Oh, no, it's 2.84 on this one. Need to look into it some more. Some of the ETFs are paying better. One of the ETFs I was looking at yesterday, I think it's copper. One of the copper ones is paying. Where is it? Here we go. I know. COPJ it is actually. Is COPJ on there? Let's have a look. I need to check if this is correct, but a 10% dividend on copper, so it's a commodity I want to be in, with a 25% potential upside, that is very interesting. I need to make sure that this dividend is correct, the way that they're paying it via an ETF. But that's how I do it. It takes a lot of time, read lots of stuff. This is Dividendology. I think he's on Substack as well. He's looking at Microsoft. And Microsoft, I looked at the moment, and when you look at it, it's got a good recurring income model and lots of potential upside. But on the other hand, I think the dividend is less than 1%. So it's not one of those that's going to be of any interest to me for the dividend. It would only be of interest to me for growth. And let's have a look. Bank stocks, Microsoft. Yeah, Microsoft is cheap at the moment. I mean, it's got to get through this lot, but it was 30% higher a while ago. I say I'm pretty sure it's about 1%, and Meta, I think, is about 0.5%. So that's what I've been doing. That's what I'm focusing on. If you're a retail investor and you want to get involved in the SpaceX IPO, then I'll stick this link in the box as well. Have a look in there. This was from earlier this month. And where's my chat box gone? Excuse me, I'm just going to sneeze a second. Hi, Dan. Dan says, how many stocks do you generally hold inside of your portfolio? For us 9 to 5ers, how much time per week or day should you be willing to commit to learning and following your YAF program? With YAF, with my investing group, I actually send telegrams out and explain to people what I'm buying and why. And that really is the main value these days because people, as you're saying, how much extra time am I going to need to be able to learn how to do all this stuff? The idea is you can learn as you go along and you have a chance to make money. If I make money, you make money. Uh, yeah. Somebody's saying I was going to do an update on YAF. I've not seen anything. Is it on the? No. Every day I've changed my mind because of the plumbing situation in the Gulf. So this slot that I've got up on screen now is to help me to make a video for YAF. So I am going to do it this afternoon, and I'll put the note on Telegram when I've done it. One way around it, Dan, I am about to start a portfolio for folks who just want to do it on ETFs. And an ETF is a bunch of stocks. So you could do it on, get access to some mining stocks and the stocks for probably 10 or 12 investments. Devon says, yeah, Musk will have 10 votes per share while the others get one. But apparently, because of his holdings, Devon, he becomes unaccountable. And last year or the year before, his payout, his dividend was blocked by one person, which was insane. So I think he's done it for that reason. But I mean, you've got here the guy who's going to be the richest man in the world. They're talking about him being a trillionaire, and he's going to be able to do whatever he wants within that company. And that's the point that the guy was making in the article. I have just sent a message to Andy to tell him that the his course is missing in the website. No idea why that suddenly disappeared, but he's going to do that. Yes. Pierre, 16, no. Right. Thank you all for attending. Thank you, Ashley, for going through Forex as well again, and Pierre for attending. We need to get Pierre behind the microphone, but he has a few technical issues at the moment.
Mark,
And
you were in a trade, right? You said AUD?
no, I'm not in it.
All right.
I have a pending order for it. I don't normally counter trend trade, as you know, but I did have a half decent win on this last time, and I think actually my stop at 50. So it's a 1 to 2 for me because the 55 EMA clearly is being support and resistance.
Yeah.
If it gets up there today, my thinking is that will be 86 pips and the average is 60. But there is news overnight, I think. So I'm going to have to keep my eye on it. And I showed last time when I took it here last week, there was MACD divergence, which has now moved on. So yeah, that's my only one I've got at the moment because I'm trying to do it as hands off as possible.
Okay.
Righty ho, we've managed to squeeze it all into the hour. Thank you all for attending and have a great week. And yes, Dan, ETFs sound much more achievable. Right. If you're in my investing group, I will post the video this afternoon, I promise. So therefore, I must do it now. Catch you all later. Recordings will be in the blog later today for Ashley's and mine in the morning. See you all later. Bye bye now.